Here's the second stock I want to look at today. This is Single Touch. This was my second most recent idea, which I published on March 30th at $2 a share. In fact, the March 30th date is right here, and as you can see, it traded rather nicely that first day, hitting a high of $2.31. So I published at $2 right here on March 30th, and within 1, 2, 3, 4 trading days, the stock traded up to $2.50. So you didn't even really have to be that nimble to scalp a nice trade off of this one. You could have made a quick 50 cents if you acted immediately and sold at the top here. And here's another situation where there's something that can be learned from this chart, which I think is really, really interesting, and it'll help you make more money on these small stocks in the market. We have a big volume day right here. This is 150,000 shares, which is the highest volume the stock has ever traded, and it trades to a high of $2.50. Next day, the volume starts to come down, and the stock starts to come down as well. So clearly there's, again, a little bit more demand for liquidity than there is demand for supply. So you're going to have a stock trading the wrong way. And the stock starts coming back down, and really within 2 or 3 trading days, eclipses my $2 entry level and comes back down. This is the day I want everybody to look at, because this is a classic market maker head fake. This is exactly the kind of thing that retail investors fall for that causes them to lose a lot of money. It's really engineered by the market makers. Probably what happened was the market makers looked at the company and saw that it's a little early stage. They don't have great revenues yet. They don't have a lot of cash in the bank right now. The stock valuation-wise is a little high. They have such huge upside, it's probably worth it, but the market makers recognize that fundamentally the company's not there yet. So there's probably a lot of short selling going on up here. So as they bring it back down over the next 2 or 3 days, they're looking to buy your shares back at a cheaper level so that they can scalp a profit. And on a day when there was really nobody around bidding for the stock, they do this gigantic head fake and take the stock down in one fell swoop on nearly no volume to a low of about 55 cents. I actually saw 2 or 3 trades go off at 55 cents. So there's a possibility that some poor soul who bought it up here at $2.50 when he thought it was hot went and sold it to some market maker who made 2 points on his trade way down at 55 cents in this big head fake. These kinds of insane down volume bars are a psychological game to try to spook you into selling your shares to them at a very, very low price, because you're going to make the assumption something has changed or something's wrong with the company and you don't know anything about it. The day this happened, I was immediately trying to buy the stock in the open market for my own account at $1 and never got a fill. And the stock ended up trading back up to $1.60 on the same day it printed at 55 cents. That's a lot of volatility. Since that time, the stock eased back down, and now it's starting to find its way a little bit higher on very, very light volume. I suspect that the next time there's a volume surge, this one will trade back up very nicely as well. This is a company that may revolutionize digital advertising as we know it. They've got a monster relationship with AT&T, a monster relationship with Walmart. It's a little early stage, but I'd rather be in a day early than a week late. And there's going to be some monster developments with this company that will get people really excited. So between now and the end of the year, I see this one as a potential huge win as well. A little bit problematic in the short term here, but I really want people to understand never, ever to panic and be spooked by these market makers who are trying to buy your stock cheap, because this right here is a typical market maker head fake to try to scare you psychologically. Don't fall for it.